Okay, I said it was going to come with a login ID, and it's coming with a default generated password, personal password, and also an investor's password. So that login details or credentials is actually for your live your MT4 login platform. All right, so what it does is that the moment you now bring those login IDs here and enter, is going to mirror everything that is done on your client's area back to MT4, and also MT4, whatever trade you took here or you take here and closes here, the history and everything from here is also going to be mirrored back to your brokerage platform. So it's still your account, it's still one-on-one account, your account. So now you are going to search for the server type. Okay, so for the demo account, you see the demo server type is going to come with the email. So you just see where you find broker. Either you search your broker's name, maybe you search like FX space. You're going to see FX space coming up. Right, yeah, so you're going to see FX space coming up. So you're going to choose the server type or the server name. It comes with different server. You choose the one that I've given to you, like we have real server, real 1, real 10, real 2, demo 1. So if it was a demo account, you're going to select demo, and you now put in the login details, put in the password. This is always tick, and then you're going to sign in. All right, so that is how you do it. You just copy the login details and then sign in here immediately. It's going to load. It's going to load, and once it loads, it's going to show your name, and it's also going to show the balance, the leverage, and everything that comes with that account. All right, that is one way of creating or logging in your live account on MT4. And also you can open your demo account right here. For your live account, you must go to the broker's website. For us, you have to follow the link we provide on our channel, and you sign up for your live account and create your demo account from there as well. But the other shortcut is to create a demo account on this platform. You can come here and select open a demo account. All right, so what you need to do here is just to search your brokers, maybe OctaFX. All right, OctaFX, you can you should be able to see the demo account here. All right, and I know that OctaFX likely want you to create the demo account after creating your live account at the website. So you can create maybe like FX space demo account. All right, so you just select demo, and boom, it's going to show you a form to fill: name, phone number, email. You choose your US dollar amounts here. You can choose $10,000. I likely use $10,000 for demo trading, and leverage maximum, and you click on create an account. It's going to create the demo account automatically for you. And you can also do that to any other broker. Let's say IC Market. All right, you select IC Market. It's going to, oh, don't know what's that, sorry about that. Now okay, I think something happened there. Okay, so this is where we were. Okay, so you select IC Market demo 1. All right, so you select IC Market, and immediately it's going to pop up the details. If you have already input other details, and then you just select your balance you want, and then you create the account. All right, back to the main MT4. So that is how to link either your live account, your demo account to MT4. All right, so here on your MT4 platform, you have this 1, 2, 3, 4, 5, 6 menu, okay, or tax bar. So this is simply going to be your quotes. This is called quotes. All the currency pairs we've been discussing is right here. We have the USD CHF, Europe USD. You can see the spread. The spread as of now is 9 pips, 1 pips, and 1 pips, 1 pips, 1 pips, 2 pips. All right, okay, you actually reading the first number, so the other one is just let's just say an addition. And you can see the bid and ask price. We've been talking about the buying and the selling price, and this is actually the rate, the exchange rate. All right, and then you can now do what you can now add instruments you're going to trade. If you don't find them here, you just click on this cross sign and you go, you will see forex, see crypto, indices, metal, all the trading instrument your brokers provide you is going to be here. And if you click on forex, you're going to see all the different forex space, and once you click on any, it's going to be added back to your quotes. So for this video, this is your quotes, and the next thing is going to be your chart. Okay, you can see your chart. So the lines you're seeing here is actually the indicators we use for strategy: the moving average strategy, the stochastic, the basic strategy I use for trend identification, entries and exit of trading. Okay, that is going to be advanced a little more. We'll come to that later on, and you'll find that also on our strategy handbook. Okay, so here is your charts. You can see the instruments and the time frame. If you click here, you're going to see time frame. This is 15 minutes time frame, 1 hour time frame, for 4 hours time frame. So one thing you have to know, that this candlestick we mentioned is actually being formed based on time frame. So here on the 5 minutes time frame, the candlesticks are formed based on 5 minute time frame. Each of it is formed based on 5 minute time frame. So you're going to understand more of candlestick when you're studying candlestick anatomy and the candlestick strategy, to understand the candlestick patterns, charting, and also analysis. Okay, so it's going to find the candlestick stuff there. You know how the candlesticks is being formed, how to trade, and how to analyze, using it to draw support and resistance, and so using it to identify supply and demand zones, and find your entries and your exit while you are trading. Okay, so this candlestick is actually being customized, red and green. You can customize it to any color, even the background and the foreground, any color you want to. It's very simple. So from here now, you can also see the bid and the ask price. The two lines you're seeing here is actually the bid and the ask price we've discussed about. So the difference of these two lines is what we call the spread. So the space in between the lines is what we call the spread. So the spread here is actually what the brokers charges you. And for a floating spread, we have discussed there's a variable spread and a fixed spread. We also have an account type that can give you a zero spread. So on a zero spread account, you're going to have it the bid and the ask price very close, very tight together. And also depending on the market condition, you can have them come very close and very tight together. Right now, I think this is about 9:51 GMT. Also, the market is not that liquid and volatile, so we are having that spread getting a little bit wider. It's actually about a time where market is going to close. So that is just about that. The next thing before we get to the next thing, on this same window you can see the functions buttons up here. Okay, one of them is actually to switch you to instruments. Okay, all the instruments you have on your quotes, you can either switch them by selecting them. You can switch the charts to any instrument at all. Once you click here, you can switch your charts to any instrument, and also tap, you get time frame and time frame, daily, monthly time frame, and you'll be able to analyze based on whatever time frame. And another thing is here, if you want to pick a price, this is cursor. You can pick a price and read the price from any point or at any point here, and you can drop it back. And this is a function where you have to set your indicators, moving average and whatever indicators, stochastics, Fibonacci, okay, stochastics and all of that, RSI, where you have to check all of that. All right, the next thing here is going to be this window, all right, where you see a cross sign here. So when you see a cross sign here, if you click, it's going to open you to what we call the trading window. The trading window is where you actually place your order. All right, so we are right now on the trading window from our chart. From our chart window, so you just click this cross sign and you're going to move you to a trading window. There are other ways you get into these trading windows, but that is just one way. Okay, now we are here. You can see here we have the instrument. We are trading Europe JPY, Europe Japanese yen, and you can see the market order here is market execution. We haven't come into this market type, order type or order forms here, sell stop, buy stop, all of this, but mostly what you'll be doing is going to be market execution. All right, this is when you are now making some order analysis and using it as a pending order. Okay, these other types are used as a pending order, but for market execution is instant market execution. What you have here is what we have discussed, the volume, the lot size. So you can see lot size here to be 0.21. It's taken from the last trade I took to record that 0.21. So you can see 0.01 here is a micro lot size, and if you do this is 10 lot size. If you do 1.00, that is a standard lot size, and then that simply means that for every trade or every price movement, for every single pip, I should be able to earn about $10 per pip. All right, so you can actually do even 2 standard lots. All right, 2.0 standard lots, or you can put your cursor and do around, let's say, a micro lot, a mini lot, let's say a 1 mini lot. All right, 0.1 is actually 1 mini lot, or you can even do 5 mini lots. So these are volume or lot sizes. You size your position based on the size of your account. All right, after we have done that, let me take this to a standard lot. I've taken this to a standard lot. Okay, let me do have a standard lot. All right, have a standard lot 50. Okay, and then what you have here are still your ask price and bid price, or your rates. Okay, and then what you have here, this 0.000, we have this on the right hand and the left hand side is actually what we call a stop loss and a take profit order. A stop loss and a take profit. So this is where you put your stop loss and this is where you put your take profit. So this is just being taken manually, automatically. It's been input for me, but if I'm going to use a stop loss and a take profit, I have to properly calculate based on my chart and know where I'm going to stop my losses and know where I'm going to take my profit. So these are pending orders as well, where you're actually setting it so that your broker can take action when necessary for you to either stop you from a losing trade or take profit from you and keep your money for you from a winning trade. Okay, so now we've said that 2 things is done in the market: buying and selling. Either you're buying or you're selling or you're not doing anything. So you can see the order here is just either you buy or you sell. So we are going to take this trade randomly. We haven't done any analysis, so it's what it's called a discretional trading. Maybe just taking the trade based on information or based on your candlesticks you're just seeing and just taking the trade. So we're going to trade discretionally without analysis. So it's not a good way to trade. So for this video, we just bomb into this Europe JPY. So this is the first order you're going to practice with me. So you can take either buy or sell right now and see how the order is being filed. All right, let me take a sell. All right, I'm taking a sell. You can see order is open and boom, it's filed. All right, so remember the only trade we have here as we started this video was Europe New Zealand, which was still running in profit. Now we have taken Europe JPY. All right, so you can see at the first when we take that trade, we have a negative sign. The negative sign, the negative position there, that is actually the charges. The spread is what the brokers take first. So once you enter a trade, they charge you for entering that trade. So whether you make profit or not, they have already charged you from that's their commission for taking that trade. So that's why when we take the trade, it's first landed us on a negative. All right, so if it was a zero spread account, that is where you're not being charged, you're probably going to get like 0.00 and then slightly a minus cents then before the trade start reading either positive or negative. So the market is not always stable. The market is not going to, like I told you before, that every time you're trading, you're making profit from the exchange rate, from the price you buy to the price you're going to sell. So the market is always changing. It's not constant. It is not stable unless it's been closed. So now the price is going to change up and down, change up and down, change up and down, and so you just allow the market to move. When it moves to a reasonable amount of pips or a reasonable amount of a monetary value you're getting based on your targets and based on your analysis, you can now take your profit or you close your losses. So two things happens in the market, which is risk and reward. Risk and reward. So it's either you're going to risk and gain a reward, or you risk and you take losses. Risk, take profit and reward. So trading a 5 mini lot size is a huge volume. In a case of having a volatile market, this can go really crazy either in profit or really crazy either in loss. So we are negative minus $9. Eventually this can go in profit. Remember, we have not even look into our chart yet but before we take the trade, so it's just a discretionary trading. Okay, we are finally on this window. Okay, we have balance, equity, free margin, margin level, and all of these positions. So this window is always going to show you your active trade, your running trade. Anytime you take a trade, it's going to show you your running trade. Okay, it's going to show you your running trade. And equity here is actually your current balance. Let's say your current status of your account. So like now we have $10,046. That is because we are making profit here. Okay, we are having $63 here and we are having a negative of minus 19. So this minus 19 is being subtracted from this $62 here, which is the profit, and it's giving us the balance of $40 here. So that's why we are having our equity plus our running trade, either positive or minus, is going to add up to make us have what we call equity. So at the end of the day, if I close this trade, the negative trade here, I'm going to have my balance being deducted. My money is going to be deducted from my balance, so I will have like $9,900 and something dollars as balance. And once I also close the profit, it's going to be added back either profit and also show me what is my current status. So yeah, it's all about, if you make profit